Welcome to another Sunday Night Stock Charts Live. It's going to be a big week, and we have a lot to go over. The futures are open. We're going to go over the futures. Obviously, we're going to go over economic data that's coming out this week, economic data that came out last week. We're going to talk about sentiment indicators, why I believe that in the next several days, we are going to get a vicious counter trend rally. Does that mean the bottom is in? No. We're going to talk about what's going to be the catalyst to cause a short-term bottom anyway in the market. So, first off, I hope everybody had a great trading week. Have a profitable trading week. Smash the like button, subscribe to the channel, and let's get to it. Futures are open, and we are up on the E-minis. As we let things settle down, we will say hello to people. Jeff, hello. RL, where you been? Yeah, hey, Larry. Back to the old days. Back to the old days. It's happy hour somewhere, Bob. How is your daughter doing? No sound? No sound? How about now? How about now? I hit the mute button. That was my bad when I freaked out. I should be back now, right? Yeah, should be back. Good. All right. Thanks, Jeff. Okay, so we have the E-minis open, and we are up spot 42%. Two things are going to happen here. I don't think that we're going to open up flat. Two things that are going to happen. We're going to have a vicious rally up tomorrow morning or a vicious gap down. Uh, the way that we left off on Friday, we were pretty oversold. You did see some buying into the close. So I get the feeling that they're going to spike it tomorrow morning. What am I going to do? I'm probably going to lean into the short side in anticipation of a continuation rollover on this market. But I don't want to be short for all too long. So the E-minis are up just shy of a half percentage point. Let's set up an alert here. Let's take a look at the Nasdaq. Nasdaq up over a half percentage point. hate when I do that. Picking up a little bit of steam here, up spot 5.4%. So I'm just setting these alerts to gauge the strength of this rally. Do we get stalled at resistance? And if we pull back, do we put in a higher low? And that's what we're going to be watching for tonight. Let's check out the small caps. Small caps up 0.44%. You can see how RSI on the small caps is pretty oversold. This is a 30-minute chart on Friday afternoon, so it's no great shock to get a rally here. The key is do we hold it and do we rally into the close? Oh, do we rally tomorrow morning and do we close strong? This would help if I shared. Thanks, Jeff. Sorry about that. All right, so I'll go back through these. Russell 2000 up spot 42%. Nasdaq 100 up spot 40%. We're not seeing a lot of buying here. There's not a lot of money behind this. E-minis are coming off their highs now. All right, let's let this settle down. Bob, it seems like these early futures pops just shake out all the shorts and then sell off. Also, Bitcoin is taking a bath this weekend. Yeah. So yeah, in this in this market, you know, you don't want to buy that morning rally. It's typical. You'll know when the sell off is over when you wake up and you have bright red futures. Bright red futures. You want to see blood in the streets, and then at the end of the day, you want to see a bullish reversal bar. For those not familiar with what a bullish reversal bar is, link below. I have a 5-part video tutorial on my top 5 favorite candlestick patterns. So it's free. And one of them is the bullish key reversal. So if we open up green tomorrow, if they paint the tape green, you know, I'll be adding to shorts. We shorted the small caps last week. We shorted the triple Qs last week. So I'm going to be looking to lean into that short side because I know from past corrections and bear markets, this is not the way a bear market ends. It's just not the way it ends. So buckle up. It's going to be a rocky week. VIX has been rising after each of the last FOMC minutes releases, then falling after FOMC meeting. Okay. Okay. Rates at 25 basis points. Still buying. Yeah. Yeah, the mortgage MBS, for those not familiar, is mortgage-backed securities and expanding the balance sheet. Well, to be fair, Buster Stacks, they I'm going to go over the chart in a moment of the Fed's balance sheet. It has been coming in a little bit, but even a little bit is not enough to keep this market up. Well, the Fed wants the inflation to inflate away our debt, but that works if you stop taking out more debt. We just keep printing out money. It's 33 billion going over to Ukraine that we don't have. It's all debt. So um, otherwise, they'd be able to inflate our debt away by killing the dollar. Speaking of the dollar, let's take a look at it. We're gaining again on the E-minis. I think we've seen a top in the dollar. Let's take a look at the euro. Euro, higher lows. Yen is down. Right at support. We'll see if that holds. Now, if we break out above this upper band of resistance here and the euro holds its strength, that means the US dollar is coming under pressure. And the way the world is going right now, you're going to want to take a look at commodities, but in particular, gold. Now, gold is down $13, back down below 1900, but off of its lows. We'll check back in on gold later on. Sticking with commodities for a moment, home heating oil coming in. This is just a pulse check of inflation, real time. Natural gas moving up. Wow. Moving up over 2.5%. VIX down, obviously, with the E-minis up. Where's my light sweet crude? Light sweet crude down slightly, but this is a bullish reversal bar. So what this is telling us is that we have support below. Copper. Copper is really taking it on the chin of late. It looked as though we were going to break out. This is pretty damning. We're close to a new weekly lower low here. Let's stick with commodities, cattle prices coming in. What about wheat? Corn. Corn's moving higher. Wheat's breaking down here. Potential breakdown here. Now, the reason why commodities are so important is that the Federal Reserve is very good at one thing: finding excuses not to do the right thing. So if you see commodity prices come in, wheat, cattle, oil, certainly not natural gas, that's up. If you see those prices come in and you see the the headline CPI number come in slightly, even a little bit, they'll just say, well, what we're doing is fighting inflation. You're seeing it reflected in the CPI. We don't need to be as aggressive with the rate hikes as we thought we might have to. We stand ready if necessary, and that's what's going to turn this market around. But if you see these prices move up higher, if you see wheat breakout, cattle breakout, oil breakout, they're between a rock and a hard place. Copper lower, weaker economy, weaker. Usually, yeah, Dr. Copper is usually an indicator that you have a weak economy. And in this case, I would say it's global. Yeah, yeah. So here we have conveniently, we have to kill 27 million chickens. Uh, we have countless food processing plants that have either had planes flown into them, bombs blown up, boilers blown up. So something really wonky is going on. TZ, hey brother. Trader Isaac, hey Bob. When can we buy oil, energy stocks? Price at the pump went up in South New Jersey this week. We can take a look at the chart. Off the top of my head, I wouldn't want to give you an answer on that. We'll take a look at the chart. But as long as you see oil come in, always know that the correlation between energy stocks and oil is usually tick for tick. So here's crude prices on a weekly chart. This is a problem for the Fed. I mean, this is a good looking chart. We were extended. We pulled back. And now we're breaking out. So it may be time. Yeah, you could argue that. You could certainly argue that. And it doesn't help sentiment wise that you have GDP, which came in negative last quarter. That was basically due to our trade deficit. But you know, people read into that slowing economy, less need for oil, and they'll sell oil. Okay, let's take a look at some topics that are on the agenda for this week. And this is where we do a pulse check each week. And I've been going over this chart for the past couple of weeks. We remain still in what I believe to be an early recessionary period and a bear market, which is really just getting going to the downside. So, energy, we'll take a look at a chart of that later on because I'm curious myself. The banks were not ready to buy yet. Utilities definitely not ready to buy yet, not with the yields rising. Healthcare, that's a maybe. So we are here. We're still in a market where people don't believe that it's not over yet. They're getting it, but the economy is definitely rolling over. You're seeing layoffs now. Wells Fargo, a lot of the technology companies, Netflix, they're laying off employees. So economic data that came out last week, durable goods, met expectations, okay stuff. Consumer confidence, miss. You got to have confidence in the economy. Initial jobless claims as expected. Here's the Pimp Mac Daddy for last week. And the first estimate of GDP Q1 negative. 2 sequential back-to-back quarters of negative GDP is official recession. Employment costs. This is inflation. Beat. Cost of employment rose, which is while the cost of people may be making more money on their jobs, it's not outpacing inflation. So net, they're really earning less than what they were last week, despite being paid more, if that makes sense. So while this is good for the worker, excuse me, this is good for the worker, uh, it's not good for their cost of living. PCE at the core. This is the Fed's favorite gauge year over year. Inflation rising 5.2%, slightly better than what was expected. Chicago PMI, they expected a big number here, 62. Any number above 50 is a sign of expansion. Below 50 is a sign of contraction. Big miss here. Big miss, 56.4. Consumer sentiment missed. Now, coming out this week, a lot of economic data coming out. Not so much at the beginning of the week. You're going to have some manufacturing data, job quits. That's literally people quitting their job. But it really gets heated on Wednesday. We're going to get the FOMC statement. We're going to get ADP employment report. We're going to get this knucklehead's press conference. It's like an hour of nails on a chalkboard. Non-farm payrolls. Here's the Pimp Mac Daddy for this coming week. Non-farm payrolls and average hourly earnings continues to underperform the rate of inflation. And my guess is consumer credit is going to continue to expand. Now, valuation of the market will remain overvalued. This is the Buffett indicator. We're 38% beyond historical trend. So despite all the selling, measured by the Buffett indicator and the Shiller PE ratio, we're still very expensive. So despite the bloodbath that we saw last week in the market, it ain't over yet. Earnings this week. We pulled back from doing earnings trades last week because I got hit on Netflix. We traded some of that loss back last week, but still way too volatile of an environment. So I'm going to pause on at least on small company like Airbnb. I'm not going to trade that. Twilio, definitely not. Cloudflare, I'm going to back off on this one. I usually trade this one each quarter, and we've always done well with it. But given the valuations of these companies and the damage that's being done to them post earnings, it's just not worth the premium to get ahead of that steam shovel. So I'm going to avoid them right now. Let stocks get cheaper, and then we'll come back to them in the next quarter. I was talking about this earlier. Disposable income falling at a record pace. This is the American consumer right now. So the consumer is the backbone of this economy. When you have the consumer unable to make payments on their credit card for disposable goods, well, they're spending it at the gas pump. They're spending it at the supermarket. So this is very, very bad for sentiment. So I'm going to go over some positive charts here, and I'm going to go over some negative charts. And the one thing predominantly that I'm not going to go over any headlines because I don't want this to become a political commentary, but the representatives that we have either in the White House and Congress, Democrats, Republicans, corrupt. We now have a ministry of truth in this country, if you could believe that. Ministry of truth. As long as this type of rampant corruption goes unabated, they're going to get richer. We're going to get poorer. So it's best to be very, very careful in this market environment. Just because we have one big down day doesn't make it a bottom. We need to see a washout. We need to see I said it earlier, for those just joining in, you'll know when it's a bottom when you wake up. You have Dow futures down triple digits, heck, even S&P futures down triple digits, and then you close positive on the day. This type of price action, if we wake up to it tomorrow morning, S&P 500. Oh, look at this. We're down now. Why did my alert fire off? I didn't hear it fire off. Okay. Let's see what's going on here. Nasdaq reversal. VIX. Let's bring up the dollar. All right, so here's the problem here, folks. 10-year yield. I was going to go over this chart in a moment. I'm still going to go over it. But the 10-year yield is, we have new weekly higher highs. We're hitting a 3 handle this week on the 10-year yield. And that is not going to be good for especially the Nasdaq. VIX is really picking up steam now. Dollar picking up steam. That's not good for the Dow. Wow. This is a 5-minute chart. Tues broke. This is a late. This is a late alert. I finally got the alert. We're now down a 1/4 percentage point. New weekly lower lows now. All right. So as I was saying, you need the washout. You need that. You need capitulation. You need triple-digit down futures, and then you need a bullish reversal bar. I would not go buying this market right now unless two things happen. One, we hit historical support. Two, we get that bullish key reversal bar. We're not at support yet. We may be by tomorrow morning. All right, let's get back to. I'll try to revisit the futures before I log off. All right, so taking a look at the S&P 500 and why I don't think that we're done going down. And I went over with members over the weekend. It's posted on the weekend commentary. If you're a member, go check it out. I gave all the strategy that you need for this coming week. Now, the month is over, right? The month of April is now over. The question, all I have to ask is one question. Did we take out the prior month's lows? The answer is yes. So the path of least resistance for this market is no longer up or sideways. It is now down. So expect new lower lows going into May. We already have it already. Volume was not horrific last month. Now, what we still have that's ominous and in front of our faces, daily chart, is this head and shoulders setup. Left shoulder, head, right shoulder. And here's our neckline. Now, if you take a look at the triple Qs, we've already broken the neckline. S&P 500 has yet to do so, but I think it's going to do it tomorrow. So we're going to remain short. I'm not going to add to shorts until we get a counter trend rally. I'm probably going to cover shorts tomorrow morning if we do open down, because there are reasons why I believe that we're going to get a market rally fairly soon. And I've gone over some bad news, right? But it's not always bad. There are always counter trend rallies. We want to profit both from the short side and from the long side. So while I'm short of the market right now, I'm already thinking, when do I get long? So I'm going to give credit. I changed the chart up, but I always credit people. Chris Peruna on Twitter posted this out. I retweeted it. Good chart. And I wasn't going to go over this, so that's why I want to give him credit. And I hope he would do the same for me if he uses any of my material. Here's the same exact chart. But what I wanted to do here was show you what happens. This is what you call, I should explain what this is. This is the bulls versus bear sentiment index. So what you're looking at, what Chris has on this chart is in dashed line is really the Rubicon. It's the line at which where you start breaking down below that line, you're at extreme bearish sentiment. And normally what happens is that you get a counter trend rally because this is unsustainable. So at some point in time, you're going to hit support. You're going to get that bullish reversal bar. Then you're going to get a rip roaring rally up higher. We want to be ready for it. So what we're doing right now is we're identifying that bearish sentiment is at horrible levels, and that's a good thing for us because we know the short covering rally is going to be a rip your face off rally. So we're going to keep an eye on this. So this is a good thing. Now, what I want to point out is that in times past, where we've had this type of an event where we've had nosebleed sell-offs or let's say capitulation by bears on this chart. You've had one episode here where the S&P 500 was in a downtrend, and while we did get a rally, it didn't last, right? Why? We were in a downtrend. The downtrend got oversold, and we got a rally back, and it was a huge rally back. And then we rolled over, and we put in lower lows. But here, where we had the same situation, we were in an uptrend. We had just put in a new low, higher low, and that began a new bull run. So we are more in alignment with this episode back here, where the market was already in a downtrend. When we got into the situation, we suspect that we will get a rally. Could be a couple of weeks worth of a rally, but then ultimately we're going to roll back over for the reasons being we have a corrupt and incompetent government. We have a Federal Reserve that is asleep at the wheel. They refuse to fight inflation. We have an economy which is slowing dramatically with a negative print on GDP of 1.4% last quarter. Equities still remain very expensive. There has been no washout yet. There is no reason to go jumping in and buying yet. There's nothing in Congress right now that could help get this market going with tax cuts, anything like that. If they have no plan. It seems as if it's a planned deconstruction of the economy. And you may say I'm being hyperbolic. I'm just pointing out facts. I'm just looking at facts. And when you have a ministry of truth out there now, because Twitter was bought out by somebody that doesn't have leftist leaning bias, and all they want is free speech, you know you got a major problem in your country. So, and if you don't have free speech in this country, what happens to innovation? What happens to debate? Once you get that groupthink, you end up like a Soviet Union or communist China. What else is going on out there? Put call ratio. The number of puts being called or being purchased right now long is high. It's come off of its highs. But once we blast through, if we blast through 1.15 on the put call ratio, that's a buy signal for equities. This is what we're watching here. This is what's going to tell us, one of the tools anyway, along with bull bear sentiment, along with put call ratio, that's going to tell us there's way too much bearishness. We need to get long, at least for a short covering rally. Margin debt is coming in. That's a good thing. I think that's the VIX. That's the S&P 500 hitting new lower weekly lows. We continue to weaken up here. Now down just shy of a third of a percentage point on the Nasdaq. That alert was for the S&P 500. What's the VIX doing? We're now down a third of a percentage point on the Nasdaq. VIX is getting ready to punch through to new weekly higher highs. We're probably going to see a 40 handle on the VIX some point in time this week. That 10-year yield is a stone's throw away from a 3 handle on the 10-year yield. Buckle up, folks. All right, so this is a double-edged sword. It's good that we have margin debt coming in because that means that you get less forced liquidation on these sell-offs. The however is that if a lot of these guys have been wiped out, so they're not around to step back in. And even if they have capital to step back into the market, they've been burned. They're not coming back. A lot of them aren't coming back again. All these YOLO guys, you only live once, or diamond hands, all this nonsense that was going on, you don't hear from them anymore. Here's another sentiment index in a way. The number of stocks down below the 200-day moving average, it's 100%. I mean, we're getting ready for a rally here. That doesn't mean that we're going to get an update tomorrow. It probably means we're going to get more pain short term, but we're setting up here for a big counter trend rally. And I don't think it's just going to be a one-day thing. I think it's going to be a multi-day event. But it's probably going to happen after the Federal Reserve meeting. And in the short term, what's going to keep the pressure on the market is this chart here, the 10-year yield. We are going to hit probably 3.24, which is major resistance before we get a reprieve on the 10-year yield. The VIX, we broke out above a secondary resistance level last week. We are poised for a breakout on the VIX to new weekly higher highs. You're going to have quite a bit of resistance between 37.5 and 38.94. I think it's going to be very healthy for this market if we get a 40 handle on the VIX. That's blood in the streets. And in that situation, you got to have liquidity. You got to be off a margin. In a market like this, having capital, having that cash on the sidelines is what I profess constantly, and because that's what allows you to set yourself up for the next bull market. So don't, just because we're down tomorrow morning does not mean it's time to buy. Wait for that bullish key reversal bar day. So what's going to ultimately cause the stock market to begin to move up higher? Unfortunately, it's going to have to be an ending of the unwinding of the Fed's balance sheet. They're going to raise rates. I'm very confident that they're going to raise rates. If they don't, you're going to see the collapse of the dollar. They have to raise rates. What they're probably going to do is what they give with one hand, meaning a half-point interest rate hike, they're going to start buying up. They're going to start expanding their balance sheet again. They're not going to unwind this balance sheet. So if they goose this up, they can raise rates and still prevent the stock market from collapsing. Every Thursday night, we go live and I go over this chart because on Wednesday, it's Wednesday to Wednesday, this report. On Thursday, after the close, this report is released. And we go over it on Thursday night. If on Thursday night, after they raise rates on Wednesday, they move this balance sheet up higher, you could bet you're going to see a stock market rally. Because what the Fed is doing is they're being cute. Remember, the first rate hike that they did in 10 years by a quarter percentage point, the same week they goosed up their balance sheet. And they did away with a plan to unwind their balance sheet. So keep an eye on this. And I think that that's what they're going to do. If they do that, you're going to get a rip your face off rally in this market. but not before we get more pain first. Let's go back to the futures. Not a lot behind this selling here. The VIX is ominous. Let's take a look at a 4-hour chart. Yeah, this is pretty bad. This is a 4-hour chart, so you have a few hours left to go here. If we close back above, let's say 41.43, we may get spared a sell-off tomorrow morning, but that doesn't help us any. I think that we probably are going to weaken up overnight, but we'll see. I'll keep an eye on this, and if anything happens overnight, I'll go live tomorrow morning, and we'll talk about an action plan. All right, let's do some chart requests. First, let's go over some comments. 15% ethanol gas, not good for all cars. No, it's very bad. Boats especially. All right, let's do some chart requests. I know Franklin wanted U-bot, yes. I have a couple of very expensive options we plan on selling this week. UNP, Align Technology. I'm not going to do all of these. CME and Broadcom. All right, let's do this. UBOT. This is a leveraged ETF, putting you long of AI. I like the sector, but I hate the chart. This is a monthly chart. We broke support on the month. We closed at the lows of the month. It looks as though we're going to go lower. This is certainly going to be on our watch list, our buy watch list, when ultimately this market does bottom out. This is a sector that's growing. It's the future. So we'll definitely want to be involved with this fund. And we'll probably, I don't know if they trade options on it, but if they do, we'll be involved with the options side of it as well. Weekly chart. Here's the automated trend lines, right? We broke support last week. Daily chart. I think this is a dead cat bounce, and we're going to fail. We're going to go lower here. So I would avoid this. It's not time yet. There's more pain yet to go on UBOT. ONDS. Where's my pen? ONDS. Let's go to good looking chart, daily time frame anyway. All right, so it's a very good chart. On a monthly time frame, we broke out on the month above this line in blue. We recaptured lost real estate. There's a lot of congestion in this trading range, as noted by these volume shelves. So I think that we're probably going to retest monthly support, especially with the pressure on the market. I think that that's an opportunity to buy the shares, small position. And we'll keep this active for a while. And the way I would play it, especially if this is an investment, I would buy the retest, use a tight stop right below that support level, and then add more on a breakout above resistance. That's what I would do. Let's take a quick look at seasonality. I don't know how long this company's been around, so it hasn't been around that long, so we're not going to use seasonality. There's not enough data here. Sometimes when you use thin data, it does more harm than good. So the chart's looking good on a monthly time frame, weekly time frame, looking good. Daily chart. I mean, it's showing relative strength versus the market, and that means a lot. So, I would like to see a retest of that monthly support level now that we're in a new month. And on that, I would be a buyer, and that's right down in here. So, ONDS bullish. Wheat. So, wheat monthly chart was extended. It pulled back. It's got to hold 954. If it breaks 954, it's going to go lower. Now we do have droughts. You do have the export of Russian wheat, which is, I believe, not being exported. But I'll tell you, you have a lot of negative news out there. But last week's price action was not good. I mean, we broke down below support the week before last. They tried to rally it last week. It was rejected. So when you have all this negative news that should be bullish for wheat, yet the price comes lower, you got to ask yourself the question: are we being sold a bill of goods, or could it just simply be that people are selling whatever they can sell to build liquidity, to meet margin calls, or what have you? So I'm not drawing a conclusion yet on this chart. Would I be a buyer here? No, I would not be. Would I be a seller? If I was heavy on it, I'd lighten up. But I think that the case for wheat going up in price is pretty strong. So I'm willing to give it a little bit more room. But if we see a new monthly lower low or weekly lower low in this case, if you're heavy in the position, I would lighten up. If you're looking to buy it, I would not buy it right here, right now. I would wait for a retest of 964 with a tight stop below, or a breakout and a close above, call it 1075. Daily chart, it's weak. You don't want to buy a stock after it's just put in a bearish key reversal bar. So don't do it. I wouldn't do it. I can't give financial advice. Your stochastics are very weak, making lower lows. So be careful here. Don't. I would not touch this right now. It's very volatile. Roku. I think it goes lower. What was the high here? Wow. 490. Where do we close? Incredible. I mean, this is the bubble. This is bubble price action. It's going lower. Unfortunately, it's going lower. We've given up all the gains from the COVID rally. So this is what's happening here is that this event pulled demand forward. So now we're paying the price for it. So we may consolidate within this range, but I'd be watching for a massive head and shoulders setup here, because here's your left shoulder, here's your head, and this could be a right shoulder forming. It's way too early to make this call, especially when you're using a monthly chart. But I think that we're going to go lower here. I look to price out a pop at around $58 a share. Weekly chart. We did come off the lows of the week last week. I still don't like it. I would not be a buyer here. Daily chart. We did gap up on Friday, and we recaptured support. That's nice, but we faded on the day, still closed up. I don't see an edge. Right now, if you bought Roku, you're saying that it's going to outperform the market. It did so on Friday. I don't think it's sustainable. I would avoid it. If you like the stock, think about selling deep out of the money puts, and if they're put to you, they're getting put to you at a much lower price. Otherwise, you're just generating cash flow. I would look at a 30 delta put spread. Just make sure it's at a support level. Wall Street Journal, China's economy flirts with recession, threatening to drag down global growth. Great. I frankly think that their growth numbers have been suspect for years. Just a friendly reminder. Oh, yeah. Pete, hey, thank you. Hit the like button, please. Bob, can we expect companies like Carvana to have big rallies? Yeah, they're going to rally. There's no doubt about it. There's going to be a rip your face off rally. I'm very, very confident of it. But the problem is with names like Carvana, who just got whacked, it's probably going to roll back over and make new lower lows. So you take a look at the ARK fund last week, and I don't know whether or not she owns any of that, but this is a major tell. Look at this break. This fund is going lower. I mean, here's the pre-COVID support level at $39 a share. And I'm being kind. We're going lower here. So what's that symbol? CR? CVNA. You might have some support at $56 a share. But if it closes down below that level, you're coming down here, it's going to see a 30 handle. So I would not catch this falling knife. But yeah, can it rally? Rip your face off rally? Absolutely. RSI, it's not even down below 20 yet. So while it may look oversold, it's not. And they try to rally it on Friday. And what happened is that all it did is just point out you have a new resistance level immediately above, right here. And you got another one right here. You got to put a lot of distance between price and these two resistance levels before you buy it, because any rally is going to be met with selling once we return back up to these levels. So patience. Ideally, you get that 30 handle. Hopefully, you're not long of it. But there will be a rip your face off rally. IHTLB. Is that the right symbol, RL? Can you just confirm that for me, please? I love that. Hit the like. You got me. All right, go with it. I like it. Good stuff. All right, so a few shorts we're looking to put on this week. Using expensive. How do we identify expensive options? Let's go through it. Wow. We're back positive again. Okay. we use the implied volatility percentile. Now we're looking for stocks that are greater than 50 on the historic IV. So IV is the main influencer of option undervalue options being undervalued or overvalued due to demand for the option. Union Pacific has already reported earnings. So we're going to be looking to sell calls on UNP. We're not going to short the stock outright. We're just going to generate cash flow. Netflix, another one. Align Technologies, we'll go to the chart. So this is how we're identifying that they're expensive. And strikes that we will be looking to sell on UNP. Look at the break on the week. So when I sell a call, that's a bearish bet, right? I'm the market maker. So I'm going to be looking to sell a call up here above this resistance. So it's say 250 on UNP. And as it drops, we'll book profits and we will roll down that strike as long as the options remain expensive. Align Technology. Same deal here. Expensive options. We'll be looking to sell calls up around here, 435 per 435 strike. And then once they get oversold, we could either buy the common stock or sell puts, creating a strangle. We could do a whole multitude of things. But all we want to do in this environment is not get too aggressive short because a lot of damage has been done here. But we want to generate cash flow, and we want to put on directional bets because we know the path of least resistance is to the downside. So we're going to sell calls, not covered calls. Broadcom, AVGO. I always want to type in their old symbol. Very weak last week, pardon the pun. We're going to be looking to sell calls up here above resistance at around 620 per share. So that's our game plan. And if we do get a rip your face off rally tomorrow and they rally the Tues up and into 337 thereabouts, I'm going to look to lean into the short side because, again, opening the market up in the morning with bright green futures is not a market bottom. I don't ever remember a time where a major sell-off has ended without a capitulation day. Friday was not a capitulation day. Kathy's I can't believe she opened up leveraged ETFs. Kathy's 2 times leveraged innovation ETF starts trading Monday. Jesus Christ. She seems like a nice person. I don't like talking bad about people, but there seems to be a lack of self-awareness there. Yeah, Pete laughing. All right, let's roll through the futures and we'll close this out. Nasdaq back firmly positive. VIX coming in a little bit. Dollar coming in a little bit. Yields. This is the pimp macked out of here. If we now we're up at 2.99 on the 10-year yield. We open up tomorrow morning with a 3 handle. I can't see the Nasdaq being positive. S&Ps. Back positive. Dow. Positive. Let's just leave it off with gold. Gold off of its lows, still down below 1,900. 1,900 appears to be resistance right now. So I'm not loving this price action at all on gold. With that, folks, thanks for joining in. Again, smash that like button. Everybody have a profitable trading week. You got it, Franklin. Thanks for being here, pal. Yeah, stay calm. Wife was messing with my pool pump while I was at work. Steam coming out of the pump. Yeah, stay calm, pal. All right, everyone. Have a great night. Profitable trading week. Be well.